Okay, what is good, boys and girls? Hush Trades here with another tutorial type of video today, and I'm just going to be going over what makes a good IFVG or Inversion Fair Value Gap. So we'll get straight into it, and I love inversions purely because my model is sort of based around it, and yeah, they're very, very good PDAs, and it tells you a lot about price. So, what makes a good fair value gap? Sorry, a good inverse fair value gap. So, firstly, are we delivering out of a higher time frame fair value gap? That's the first thing. And what does this mean? So, for example, if we are in a bullish trend, so I'll show you examples in a second on the chart. That's what I've got loaded here. And I can just sort of draw for you maybe. So, for example, if we're in a clear downtrend and a fair value gap has been formed here, we come up into this fair value gap on the for example, this is a 4 hour. We come up into this on the 4 hour and then we seek lower. So, this being a 4 hour chart, obviously inside, this leg probably has had some lower time frame gaps inside of it. So we have an inversion here, and that makes it extremely, extremely powerful because we have a 4 hour gap here, and then we inversed a lower time frame gap, which shows us quite a lot about price and where it wants to go. So that is the first thing that makes a good inverse fair value gap. And the second thing, do we have clear draws just draws on liquidity. So if you don't know what a draw on liquidity is, it's essentially where price wants to draw to. In the market, price only moves because of liquidity. So, and liquidity is everywhere in the market. And my favorite draws on liquidity are equal highs, equal lows, data wicks, but this doesn't really apply to this example. And then, well, here there's what we call relative equal lows, which is it's essentially equal lows, but they're not exactly equal. So you can see this the same. Well, roughly the same. So yeah, that's sort of what makes a good inverse fair value gap. And thirdly, it will be how aggressively did we inverse the fair value gap that was originally there. So if you have all of these ticked off, then you are sort of safe. And yeah, this is what makes a good inverse fair value gap. One, are we delivering out of a high time frame gap and has it aligned with your daily bias? Second, do we have clear draws on liquidity in the form of highs and lows, session highs and lows, other fair value gaps, equal highs, equal lows, and yeah. And then also, how aggressively did we inverse the original fair value gap? And as you can see, I could probably get onto maybe an example of what looks like a weak inversion because you probably don't really know what that means. This is on the 1 hour, so most inversions do hold quite a bit of weight. Maybe if I go into the 1 minute, where would be a good example? So, no. So like for example here, this isn't the best example, but because this is this is a fairly strong inversion, but it's not in line with the high time frame bias. And I'll get on to that in a second. Maybe I would have liked to show you an example. Like it's just where it barely inverses, like just by a small tick. Like these are fairly strong inversions here. Yeah, sorry about this. This is sort of, yeah. I'll just get onto the example and I'll show you what makes a strong inversion. Oh, it was right here. This here is a very weak inversion. I'll probably have to cut the video, but actually I'll just... So this here is a weak inversion. And why is it a weak inversion? Because we have one gap here and we also have another gap here. Sorry, here. And this is what I like to call a first presented gap. The first presented fair value gaps in a swing range, so in this swing range here, those will be the most powerful and they will hold the most power in terms of price coming down and tapping into it. So as you can see, we inverse this by like just a little tick. Maybe like we inversed it by 1 tick, if I'm correct. Yeah, we inversed it by 1 tick. So that would not be a very powerful inversion. And then paired with that, we also had the first presented, or you can call this a discounted fair value gap that we did end up tapping into. And as you can see, price immediately came back up, and I know where this price goes, so I'll play it out for you. And for this example, I'm just going to do a quick example for you, and it's good. I'll turn off this indicator. So let's just hop into this is an A+ setup for an inversion setup, an inversion fair value gap setup. And so firstly, what do we have? We have a high time frame gap in the form of a 4-hour gap. And this trading view, I don't know why this does this, but yeah. And as you can see, in a clear downtrend, if you don't think we're in a downtrend, I will show you why we're in a downtrend. So if you've heard of the PO3 / AMD concept, you will know that this is an accumulation, all of this here, and then we've come up and manipulated, which is here, and then we are now in the distribution leg, which is here. So it is very easy to say that we are going to seek lower. And this 4-hour candle here, just disregard this because this hasn't actually happened yet. So yeah, that's about it for the daily bias. And now you can see that we are bearish. And we have this 4-hour gap that is a clear draw. And also note that London has just opened. And we have this sort of, you could call it engineered liquidity / inducement before the gap, but that is the leg that created the gap in the first place. So yeah, so we can go into the 1-minute chart now and sort of just watch price play out. As you can see, we come up, tap into that 4-hour gap. Wouldn't really consider this a tap into the 4-hour gap. We just made equal highs, as you can see. This is a prime example of equal highs, right? Just that there, just disregard that. And now we've tapped into that. What do we see now? Let's see. So with this being the first presented gap, this is what I would want to see be inverted to become a powerful inversion. And also note what I wrote here. If I can find it. Okay, I'll bring this down here so we can sort of keep a track. And just make it like 12. So, right now, in this example, are we delivering out of a high time frame fair value gap? Yes, we are. Do we have clear draws on liquidity? Yes, we have this low, all this low resistance liquidity down here. Here, 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 and here. So you sort of get the point. And also, something to note as well, there is no gaps at all in this leg. So all of this price is extremely weak. And this isn't an inversion yet, but it becomes an inversion there. So we can now label this as an inverted fair value gap. I don't know what I'm saying. So we've got this, yes. Are we delivering out of a high time frame fair value gap? And do we have clear draws on liquidity? Two of our boxes ticked. How aggressively did we inverse this fair value gap? Extremely aggressively. 4 down closed candles straight through it, didn't hold us at all, and it closed right below. So what can we do here? Because this is extremely powerful and an aggressive inversion, you can definitely just enter off a limit order here and just take it all the way down to this last low. Because in theory, if these lows get broken, then all of these lows will be broken, as well as it will be a low resistance liquidity run, which is an LR, because this is low resistance liquidity. So now we can set a limit order. If I saw this in a real market and I saw the market was moving this fast, I would do a market order, not a limit order. But just for this example, we can do a sell limit here. And it doesn't actually fill us, which is annoying. Because if I saw this, I would probably have just skipped the trade. But I was looking on NQ, and it did actually come up and tap into this, because that's what I did all this. Yeah, so would have come up, tapped you, filled you to the tick. And then we can go back just for the example, just so you can see this, because I don't know how many of you really do trade MNQ. But yeah, now we can just do 10 there. Filled to the tick. And now, in theory, this should all just be taken out in this one swing. So let's see what happens. And boom, all taken out. TP would have been at this low for a 12.8 risk to reward, but you could have just kept on running it down to a 20R, which is pretty insane just off this small concept and everything aligning. So now I hope you know what a high probability inversion looks like and what makes a powerful / strong inversion as opposed to a weak inversion. So yeah, that's enough from me, and thank you for watching.